The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And a couple of things going on today. I just wanted to immediately show the DAX here. We've reached some targets above. This is the big, heavily followed European index, along with the FTSE. And 98, 96 unfair highs, and we're actually right now sitting at about 99.09. So, again, glad to see that happen. Now we've got kind of a leverage point there on the DAX itself. And as we drill down into the dailies, you can kind of see what's happening here. We also want to take a look at the Shanghai, and I'm going to pull that up really quick. This is something that's just been on a tear. And we talked about this breakout on the weeklies here. And we look back in time yesterday. A lot of you guys are not, it's breakout on the weeklies here. They come back and retest of a very powerful inflection point, then off to the races. Actually traveling the entire weekly fair auction, having a close above. And then, there's just no looking back. Here's the situation on the daily. New breakout yesterday. Come back, open up, retest, boom. That's your powerful trade. Always remember that. The get outside the profiles, come back into that inflection point on the upside or downside. And Shanghai, how do you trade this now? You don't go short. that's how you trade it now. If you're long, God bless you. That's great. And hang on until we see some new information pop up on that particular instrument. I'm going to cover a couple of global things here, and then I think Eric's going to be with us really quick. We're going to get into a couple of things fundamentally he wants to talk about, and we're going to look at some stocks relating to some of that information. Again, let's just quickly look at the S&Ps. Here's the daily situation. We've talked about the breadth being positive and no changes there on the weekly and daily, the 240 and the 60. So there's been zero reasons to try to pick a top here anytime soon. And short-term inflection points now we can pay attention to 2069 and 2059 down below. But again, that 2059 is to be bought in my opinion. So that's the way we're looking at the S&Ps, and I don't see a lot of reasons to try to pick a top here. Before we head any farther, Eric, are you on with us yet?
Yeah, good morning, John. Yes, I am.
The Mayor of Wall Street, ladies and gentlemen. How are you, Eric?
I'm pretty good. I'm doing well. We've got summertime up here, 70 degrees, and then we're going to have a snowstorm tomorrow. So that's New York. Nothing more than just constant turmoil and insanity. Do you see what I'm saying? I mean,
I hear you.
It just doesn't stop up here. The Ferguson thing is a little bit something to watch, I think, and I think it's going to highlight, in terms of overall economics, the inequality that is pervasive in the country. I think that's the economic result. I mean, he was not Martin Luther King. I don't think we're going to have another Newark. I think there's certain disappointment, but most people are just, up here in New York. You've got so many people, so many races, so many different, styles. If you smile and say good morning, people turn around and they'll stop and change your tire. If you're just nice to them, it's a wonderful place. Believe me, it is. Yeah. And I don't see any upsets or any problems with that. The problem, I think, is basically everything is going up, 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 up. And I don't think people understand why. And I think, when you see oil going down, and you see yields zero and nobody borrowing. The Keynesian of the world, China, everybody is now involved. I don't know what the Germans are going to do. I think they're going to have to finally go out and have another Oktoberfest and start putting some money on the line, because that's the only way they're going to get anything going over there. But the markets go up. You remember Greenspan? Oh, exuberance. Well, he was 3 years early on that one. These things can continue. I think we're very impatient when we see an up strong market. And your scanner is going to give us the opportunity to start taking some profits. I mean, it's only logical. You do take profits after you have, 2 years back-to-back huge rallies. But the point is, where do you go short on some things? And I think mentioned to you quickly, master limited partnerships. Have you looked at those at all, John?
I haven't. I'd like to take a look at some of them for you technically, if you've got some names here.
Yeah, I have some names. I mean, Icon has one, Mr. Icon. It's called IEP, Icon Enterprises. These things yield considerable amounts of yield. I mean, we're talking 14, 12, 16. His is 5.72. Master limited partnerships, basically, they carry and transport the fuel, the coal, and the energy, and then they store it. And the money they get for transporting it and the money they get for storing it, they pass through to investors. It's been a huge Wall Street profitable, very, very profitable game. And as Wall Street will do, they all of a sudden decide, gee, we better end this quarter with some business. Let's get some commissions going. And what they do yesterday and the day before, they come out and their analysts all say, oh, we better be careful of master limited partnerships. Well, where the hell were they 4 or 5 months ago when oil was way too high for too long? Why didn't they start talking about it then? No, they wait till oil comes down and gets a little scary. Although it really isn't going to be scary, I don't think, until it gets, into that 60 range or 70, below 70. And I'm not sure it's going to do that. I don't think that's going to happen. You could still crack and frack and do anything you want at $55 a barrel, believe me. The problem they have is oil has come down, commodity prices have come down, nobody's borrowing money, and the stock market's through the roof. So at some point, a logical, reason will tell you to look for places to take profit. And Wall Street loves to, have analysts develop commissions, only they're always too late. I mean, now oil came down, where were they when oil was way ahead of the game? Oil was up $100 in an economy that was doing nothing. It should never have been there. It should have been in the 80s for the last 6 months. So now they have all these master limited partnerships. IEP is Icon. Global Partners, GLP. Does anything show up on your scanner on these?
If they're not in the major S&P 500, S&P 100, NASDAQ 100, some of the other global indices that we follow, it's not going to be in here, but we can always add some custom instruments every once in a while. Michael's looking at me like he wants to kill me.
I know why you wouldn't have them. There'd be no reason. I mean, anybody out there, the traders should go to dividendyieldhunter.com. You've got everyone on there. You've got a list of everyone, and then take a look and see how they're acting. I think there's going to be quite a bit of selling. Because Wall Street is telling their people to sell them.
Can you define once again, just for everybody out there, what these are? Because I actually didn't. I'm not aware of everything like you are, Eric. And I'd like for everybody here to.
What a master limit. I'm watching guys drill in the streets here. I can see they're doing it wrong. I got to go tell this guy. The master limited partnership simply is a partnership of transportation of coal, the fracking oil, storage of it, transportation of various resources that are basically fall into the area of energy and creation of energy. We have a big article about them screaming for coal in certain utilities. The railroads are not carrying coal fast enough, and they're yelling that we need coal here. The same thing is going on across the board with oil and with the fracking results and everything else, and it's a storage of these things that are very, very critical. And these master limited partnerships are put together by companies that have storage. And say I've got a storage tank down there in Port Arthur. Now I know Kansas City Southern's got 20 acres. They're building a huge storage tank. Best thing to do, we'll put together a partnership. We'll sell out pieces of the partnership, and we won't pay any taxes. as the partnership corporation. We have partnership. We pay. I mean, it's a partnership. We don't pay any taxes, and we pass through all the revenue to the holders, and the yields have been considerably higher. I would say 5 and 6 times higher than you can get anywhere else. Okay?
Right. Wow.
So they've been very successful. And firms and mutual funds, etc., there are several hundred of them. Dividend Yield Hunter will show them to you. And Wall Street, in its inimitable way, comes out and starts knocking them and saying, gee, oil is, come down, and we worry about the yields, and we worry about the money being made. Nonsense. And I said, where were they when oil was way too high for too long? They should have started looking about taking profits then. So I think there's going to be a fair amount of weight on top of these stocks. I think people at the end of the year, you know what brokers do. Brokers call people to do commissions at the end of the year. Let's switch. We made money in this. Let's move to that. Bop, bop, bop. I think they're having a tough time right now when you look at the chart of the S&P. If they had the scanner, they could say, okay, I'd like to take some profit. If I was a broker again, I would take that scanner and I would look at things that have really just continued up through profiles, way up there. And I would start unloading a little bit of those, just out of pure trading sense, just out of pure, years of trading, knowing that, when I make that much, what do I think? It's time to put a few chips in my pocket, right?
Well, it's definitely
it's time.
Yeah, I mean,
I'm sorry. Go ahead.
Based on that concept alone, I mean, I personally technically try to let the profiles regulate how I'm going to treat a stock, and that's the game me and you talk about all the time. But from a money management standpoint, I guess Eric is saying right now that there's you can't go wrong taking profits. You want to let some of these things really develop. You never know when you're going to take the big trade off the table that continues to go north, and that's very, very irritating as a trader when you watch those things happen. But I think what Eric's saying in a nutshell, we're going to go to break in just a second here, Eric. I want you to hang around because we got a lot to talk about today. I think what Eric's saying is you don't want to let everything ride constantly, and if you can see some things that you may be outstretched a little bit, and maybe the breadth is turning. Sometimes stocks, when I say breadth, that means our breadth indicator on the scanner. Sometimes stocks actually that have been really outperforming sometimes snap back relatively hard if we've got a downturn in the S&Ps, and that arbitrageable situation just sometimes unfolds like that. So, guys, I've got UMP up right now. Eric, that's a railroad stock, obviously. We want to come back after the break and talk a little bit more about some of the fundamentals out there, and then how some of those stocks might fold into some of the things we're talking about. So we'll be right back. You guys hang in there.
And so
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We got Eric Courtney with us today. Once again, the Book of Knowledge, as I like to call him. Eric, you still with us?
I'm still here. You know what I was just thinking is we're in that time of year where guys know, portfolio managers, institutional pension, everybody else, they're going to have their board meetings for the end of this quarter and the end of the year in February. We're going to be in the middle of the first quarter of a tough winter, I think, but it's going to be a very good comparison quarter to last year. Chances are good that a lot of portfolio guys are going to be taking some profits. Now, with the scanner, we're able to really pinpoint and know what we're doing, especially with stops. I mean, I'm not telling people to sell anything. I'm saying be patient, but make sure stops are part of your game and keep aware of what's going on. The real world of Wall Street is they take the profits now. They love to be able to say in February when the market might be pulling back, and I suspect it might be by that time. Hey, we took our profits in November, late November and December. We sold those MLPs, for example, or we went in and bought. You know, another group I'm finding interesting, John. You should look at a little bit. Is this 3D imaging?
Yep.
You know what that's about?
Yeah, I mean, I've actually done a lot of reading on the technical aspects of it, and I was kind of like so on board with it a couple of years ago. I don't know kind of where it's at now, kind of drifted on, but the concept alone was just mind-boggling, building houses with 3D imaging, all that kind of stuff, if that's what you're referring to.
Well, now the biotechnology, the technology of biotech, okay, I think to make it more clarified, has found ways to 3D human cells. In other words, they can take machinery and put biological cells into it, and they're able to manufacture through the 3D. You add on the ink, it's more ink, it's more plastic, you add another layer on, you build a little whatever you build. But now that bio people have done a hell of a job in terms of going after this whole concept, and I think it's going to be one of the biggest factors in biotech. DDD is 3D printing. The guy behind that is the guy who really started it. I think his name is Hall. Another interesting one is XONE. That's with, now these stocks are way down. John, they have been. Let me
comment
on the bottom.
Yeah, I've noticed that. I mean, they kind of fell out of flavor for a while, but
you're breaking up just a little bit. It's probably my.
Okay, let me just kind of air it out a little bit on DDD here, because you said something. I mean, you said something about DDD, which is 3D Systems Corp. We broke profiles for the first time, technically speaking, 3531. We closed above, started rattling around, consolidating above, and then we had the kind of the moonshot. It might be yesterday. Yeah, yesterday. And now we're up in the 3741. So, this is kind of a technical breakout, so to speak, from the pattern that has really, been presented to us since early September when we started technically kind of like driving down. If I'm showing this on the screen right now, and I got to say something, these new TFNN charts and the transmission that Al does there with this HD, unbelievable clarity right now. So, hats off to TFNN. Just want to kind of throw that in there. They've really done a good job with that. So how do you trade this now? So now going into the 240-minute views and looking at the crossover of Navigator when all this was happening at the breakout below, and now it's kind of okay to be long, not okay to be short on an intermediate basis. I think it was kind of interesting how we had talked about that earlier. You brought it up, and I was looking at it technically earlier, and I was like, wow, this is – but, here's the long-term view. Here's the weekly on DDD. And, as Eric comes up with a great, idea or something to put on the radar screen, now we know that we've got a couple of things in our favor, technically speaking, and also on the weekly here, if you're looking at the screen now, we've got an orange bar trying to appear this week on the weekly, so we may have a new profile to react upon and more powerful inflection points on the weekly coming ahead of us on DDD. So, Eric, sorry to spend all the time on that, but it's just interesting how, you come up with an idea, you read an article, you or anybody else, and, I'll tell a very interesting story where when we come back from the break in about 5 seconds, Eric, I want to tell that story, and then I want you to make some comments on it because it directly relates to what we just went through with this example.
Okay.
Cool. We'll be back in a little bit, guys.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We got Eric Courtney with us. Eric, are you still there?
Yes, sir.
All righty. Okay, cool. So the story I was going to say, that which kind of mirrors kind of what the transgression of events we just went through. The cool thing about some of this information, and again, you can combine a lot of systems together to really come up with some great technical, MOs or patterns that you may want to kind of mix together. But as we use profiles and as that scanner kind of gives you those inflection points to be aware of, Eric kind of came up with a stock that was kind of on the radar screen. We looked at, oh, wow, this is technically starting to look like it's a possibility here. And those inflection points are really critical in a lot of different ways. And one of the things that we did, Eric, I don't know if you remember that group up in New York in Great Neck. They contracted us to come up there and kind of fix their mess of proprietary traders. They seemingly were all losing money. But one of the guys that we ran into up there, he had a Bloomberg terminal in front of him, and they had about 10 Bloomberg screens or terminals they were paying for up there in that office. And he was actually, kind of a pseudo hedge fund manager of a kind of a group of 3 or 4 or 5 guys. And they were fundamentally picking stocks. So they would kind of, read the articles, look at the research reports, blah, blah, blah. And they actually buy at the worst places I've ever seen. They were generally right, but they just wasted a ton of money. So what we did with those guys is, look, let's just kind of prove that it's not a bad idea to mix technicals with fundamentals. So let me show you how this works. So we took all the buys they had done for the past couple of years and looked at it whether they should have waited for a pullback into a more technically riper area, or they should have bought the breakout as it was happening. So, as we looked at this, if they bought the breakout a little bit higher, then obviously, we were kind of proving us wrong and them right, because they actually got in cheaper. But if they had waited for some of the pullbacks to this technically ripe area, then they would have saved money. So what we did is we did kind of a what if scenario for their transactions and the stocks that they dug in with over the past 3 years, and we would have saved them about 10% just by mixing some technicals. Not saved them, but enhanced their returns about 10% of what they did, which is a big number for a fund, a huge number actually, of mixing in some technicals, and those technicals being these profiles. So along with some other things that we look at. So it's just, it's great to get things on your radar screen, but it's also good to kind of step back and say, how do I actually trade the nonsense, So I'm glad you brought
a line of reasoning, what is the big picture? You bring it down. Now, technical analysis, as you know, you have two audiences, John. You've got an audience mostly of traders, a lot of guys, and making money off that. And I think that is always going to be part of the TAS whole operation. But what I see evolving here is a little difference in that I think the technicals, there's no question, that's a decision-making tool you must have and be aware of. You like this group, you got to look through the technicals to see which one is going to be better, or you can just sit down at the scanner and come up with what's looking good on the scanner, where the heat is and where you play. Now, a lot of ways to do it, but there's a different guy out there that runs a lot of money on Wall Street, and he's the big institutional guy. And where he pays attention to and what his basic strategy is to be a strategist. And what your scanner is giving people who need to be in the strategy arena of where the money should be allocated, where the groups should be lifted, downgraded, what have you, held. These strategists run the bulk of the big money in this country and the world. And what the scanner I see is developing, and what you've developed is a real tool here for the institutional money manager strategist. Because what he can do is he can take a lot of the basic technical sides. He can look and see where's their movement, where's their not movement. He can look at the longer side of the history, because you have the dates, the time, the value, etc. And we have to educate him, and we have to make sure he's able to use it properly. These guys are not all, a lot of the guys, you talk to the Byron Weens and the guys that are the big mucky mucks on Wall Street that come out with these great theories. Everybody loves them and they follow them and all. But, I don't think they know the technical analysis. I don't think they know a pennant from a Yankee game, okay? They're not, they're big thinkers. They're big, widespread thinkers. But what you have, you could take your work and become a big thinker. But the fact is, you're better off, you want to be a thinker, then drill it down to the point of gravity with the scanner and use it. So there's two tools, and I would lift up the scanner into a strategy tool. I really think that that's a branding that's going to develop. Another concept that I think is interesting for people right now to take a look at, we talked about capitalism versus, the ecology and how there's a war going on. Well, I'll give you an example. Today's paper says, and it's very important, that the prices that we have on wind and solar are now so competitive that they're actually cheaper in many parts of the country than coal ever was, or than oil is, or etc. So what we're seeing is there's a there's a drop in oil, of course. We're seeing that because of the demand and the countries of the world being in a softer economic demand position. But the stimulus now that we have, which is appropriate and which is logical, that every country is now forcing and putting together their stimulus package, makes Japan started, China is behind it, Europe is behind it. The guy, the EU, begins with a D. I forget his name now for some reason. Everybody, Germany's the only one that's still playing around in their heads a little bit with this nonsense of, being so old-fashioned and watching the books. I think we're in pretty good shape. I do too. I really do. I think things are. If we're patient, we just continue to make money. Now there is a time where a betting man is going to tell you 30% stocks, 7% fixed income will give you a much better game plan going into a period of darkness and uncertainty. And I think there will be a time where you want to drop your allocation way down, because what's going to happen is that's going to carry you through a pullback, and there will be a pullback. I don't know when. I don't know if you know when.
Yeah, but, well, let me. That's awesome food for thought. Let me just go through a couple of things, guys. Are kind of, I see some.
I'm going to jump. Comments. I'll let you go and get guys on the money wagon here. The yen
hang around today. Hang around. If you can, hang around, because I'd just like to go through a couple of things.
Yeah, I'll be quiet. Okay, you go ahead.
All right. You don't ever have to be quiet around me. I just wanted to let everybody know we've added the Thailand set. Was that the set 100, Michael? Into the scanner. So if you guys want to ever see the Thailand 100 top stocks in that index in the set, we've added it. So that's kind of in there. But one of the things that Eric was talking about, I'm just looking at Apple, green across the board here. Not a lot of reasons to take any contra stances against Apple. We've been talking about that since some of the breakouts Apple has done. But I wanted to, pull out one of Eric's favorites, Gilead Sciences, because I've been, reading some art, to have time to read sometimes. So I just kind of peruse around, and some people are getting a little bearish on Gilead, but the cool thing about the profiles, and it shows up in the scanner, is, you can kind of understand where it might be a change in tone or time to say uncle for a while, which is, kind of Eric's kind of leaning towards, how do you regulate these trades, and where's the audit trail for yourself and institutional managers and things like that. So we started breaking down the daily below on Gilead, which has really been a high flyer. I mean, a very popular stock. But 104.81 was the zone for lows. We broke down below. We're trading about 100 now. Now we're at the magical number, but that's our daily situation. On our weekly, we've got that powerful 97.40 sitting down here. So what I'm trying to say is between that 104, 105 area and 97.40, you've kind of got a no man's land situation where on their intermediate you've had a technical breakdown, but on the long term you're still kind of hanging in there. And right now it's kind of a crapshoot, in my opinion. I mean, obviously the stock can move one way or the other, but the scanner, and if you got our indicators, you've got that too. But you kind of got a situation where you might just want to sit tight and either wait for a stronger inflection point in the weekly for the market to come to you on, or wait for a breakout back above this daily technical pattern, which now will be above 105.62. So this might save you some points, i.e. where we had the original technical breakdown on Gilead. And when we had that breakdown happen, by the way, before, and I just want to do a little bit of a primer on this, 102.93 we broke down before. This was on October 13th, right? But what happened in that same concept from that, and we had to close below and go back and retest, which we all know, I've talked about this a zillion times. That's the powerful trade. That's the powerful setup. We came down, and look what happened. On the weekly, we reached that lower inflection point here, which was a big money-saving feature. We got very close down here into that lower part of the profile, which was kind of Custer's last stance for the longs, and you were able to try to leverage a bet and manage the bet or position size properly a little bit lower. So, right there, that was just by looking at the numbers there, that was a 12-point savings in a $100 stock. So you've got a 12.5% savings technically looking at something that maybe you still felt fundamentally right and long about, but the technicals can save you some points there.
That's a great example of showing how the scanner can. I mean, look, Gilead has been the rock star of biotech. And when their rock stars are hot, they have 5 or 6 records, they have a big tour, and then they disappear for 5 years. What's happening with a lot of analysts and a lot of people on the Seeking Alpha, and the guys commenting and saying, well, Gilead may be at its point now, and, maybe we've made our money, and maybe we should, but you're able to go in there and really analyze the now of what's happening with Gilead and how to play that. Phenomenal, John. It really is. Yep. Like I say, it's strategic on a one-on-one stock, but it's really able to be strategic on the overview of the whole game. Go ahead. I'm sorry I interrupted.
No. Somebody was asking about the Shanghai earlier. I looked at it, talked a little bit about it actually on the opening. Just want to let everybody know we have put breadth in for the Shanghai, so as I'm looking at this on our kind of speedometers, if you will, showing breadth positive across the board, obviously on the S&Ps, I'm going to go to Shanghai. Excuse me. And this was telling you that there wasn't a lot of reasons, and this has been like this for a while, there wasn't a lot of reasons, eliminating the short side of the marketplace for you and all the reasons in the world to buy breakouts or buy pullbacks into support areas. We always talk about, are we above or below profiles, and are we coming back down into inflection points? So, before, we had this information, and before, this has been really proven out by back testing back into 2003. It was a little bit like, is this the pullback we were looking for, and is it going to have any follow through? Well, these numbers kind of give you the concept, like, as in, on the Shanghai, for instance, or the S&Ps, that it's okay to buy support. It's okay to buy support in this instance, and these pullbacks that may happen in this, unless this breast change to negative, are to be bought. And I get sick watching some of the TV shows, and they talk about these 200-day moving averages and all these other things. It's just, in my opinion, relative to what we're showing you right now, doesn't have a lot of relevance. This is showing the internals of these indices and whether there's some disconnects that have never been shown to you before happening right now. And we're pumping real-time data into this. We spend a lot of money and a lot of server resources to crunch all this stuff for you. Please use it. It's some of the best information, in my opinion, you'll be able to kind of use as a barometer to trade some of these indexes, and we're adding new ones all the time. So let me quickly go into gold really quick, Eric, because some chatter about that I've been noticing, and I'm a kind of a gold fanatic myself. And we've got a couple of seconds here before we go to the last break. Let me just peruse through into the dollar here really quick. Excuse me. Here's our dollar situation. Then when we come back from the break, we'll be getting into gold. Here's the dollar, 87.87, still sitting there on fair highs on the daily. We've broken out above. We haven't come back and retested that yet, but I like the pattern, the way it's happening here on the dollar. So I like this thing going higher. And when we come back, we're going to talk about gold after we just kind of peg the dollar there. So we'll be right back, folks. We're going to look at the 10-year, my favorite trade.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. I got Eric still with us, I hope.
Yes, I'm still here. I'm listening to your commentary, which is great.
Good. No, yours is better. A lot of guys don't know this out there. Probably. I mean, you just. I mean, I'm just always shocked and awed by the travels that you've had in the Manhattan area with the brokerage business and hedge funds and things like that. That started in the 60s, right?
I started in the 60s at operations when I was in college at Merrill Lynch in 1964. And I kind of, those are the days if you wanted to buy an option, you had to go down the street and go up 2 flights of stairs and find a guy sitting there, a little bald-headed guy with a nice hat on, it looked like a bookie, and he'd write you an option. I mean, that's how far. And they had runners running around in the street. They looked like derelicts. They're carrying under their arm $10 million worth of negotiable bonds. I mean, Wall Street was great. It was a wonderful thing. But I lived through all of that. And now, this week, I'm hoping to do something with next week with your show with the head guy that's doing the Bitcoin game. He's got this huge office down there. I mean, it's just wonderful to watch. I hang around with young people all the time because I listen. They talk to me. They treat, hey, Pops, how you doing? Thank you very much, but that's okay. I don't care. I'm listening to you is what I'm doing.
Ladies and gentlemen, Eric started on Wall Street when the Beatles got together. That's
right.
That's what we're talking about. Guys, Eric, you work with all the folks here. I just want to point the camera so everybody possibly at TFNN gets a chance to see the night crew here and everybody that makes it work here for us. I'm going to try to get my camera out, and this is probably not going to technically work very well, but if you can see, say hello, guys. Cool. These are the guys who make it work here, and they're sitting at a desk, and they're not happy that I'm showing their picture right now, but they'll get over it. And if you get involved with some of our stuff, those are the guys who are looking at the servers and managing some of the mess, as I like to call it, that clean up behind me at least. So this is the night desk here at where we're at. So. Eric, I tell you what, in closing, let's just take a look at gold. Here's the situation on gold. We talked about this new profile, 1198, going to kind of have to be crossed and closed above. That hasn't really happened yet. So that's kind of, in my opinion, coupled with that 1200 whole number, we're just going to have a little bit of an issue there. Dollar seems like it wants to move higher. That's not generally speaking good for gold. So again, I'm kind of, we've had a good breakout here above the 1180. We've tried to, kind of take above this inflection point, never close above. So I'm just kind of thinking that, we might sit on our hands here just a little bit, and either wait for a new profile, wait for a breakout and a close above, maybe a retest of this. And I think this is kind of a waiting game on gold right now, and I think gold's kind of patiently waiting to see what the dollar's going to do, in my opinion. So that's the take on that. Eric, we're going to close the show in about 20 seconds here, and I really appreciate you coming on. I know everybody out there really loves to hear. Yeah, I mean, it's just amazing some of the research you do and some of the things maybe that people aren't aware of, like some of the partnerships that you talked about on the MLP, energy sector there.
But Master Limited part. Yeah. I've got plenty more stuff to talk about. Whenever I can bore anybody, I'll be happy to do so. Okay, you have a great day, John. I'll talk to you in a little bit. Okay?
Thanks, Eric. Good to have you on. And guys, stay tuned for Steve Rhodes at Trader's Edge. He's good. Hang in there with him. We'll be back tomorrow, guys. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.